Well, from one infrastructure space to another, steel. There was a bit of negative news for Essar Steel with one of the rating agencies, CARE, downgrading the rating on some of their bank facilities from triple B minus to all the way immediately to D, a rather steep downgrade. Firdose Vandrevala, Executive Vice Chairman, Essar Steel, joins us in the studio. Mr. Vandrevala, good morning. Thank you very much for joining us here.
Pleasure.
Well, since it's now not a listed stock, we are short on details. What is the size of your debt? And how will your costs increase because of the downgrade to default?
Well, first let me deal with the downgrade itself. The downgrade is based on the financials of March 13. And since then a lot of things have happened. So it's a prospective rating in a way. So we are sort of both disappointed and surprised by the rating downgrade and the timing of that, because since then a lot has happened in the company. There is a strong turnaround plan in place, and those aspects we believe have not been factored in. So we've taken up with the rating agency for a reassessment, for an outlook change, and for also a reassessment of our rating. So let me give you some background about what we are planning to do rather than look at the debt. I'll look at the turnaround plan. Consists of three basic parts. One is the ramp up of production. We need to understand why Essar Steel is in this condition at this moment of time and what's hurting us. The ramp up of production to improve earnings, reducing our financial costs, and at the same time improving our governance processes.
But, 1 minute, sir. If you're going to ramp up your production, you will require fresh money, isn't it? Yes. And you already have, I was given to understand, 6,000 crore of debt. So in a situation of default, will banks give you more money? Is 6,000 crore correct?
6,000 crores is a consortium of banks that has been tied up and is in the process of being dispersed. So that's in and not in. So it's in sanction, that money is coming in, which is exactly the point I'm trying to raise. That, you know, Essar Steel had taken a substantial expansion project. The last mile of some critical projects have not been completed because of regulatory hurdles. Because of those regulatory hurdles, the income generating capacity of the company got reduced. And at the same time, repayment of loans kicked in. So that sucked away the capital from the company. So we are trying to bring the petrol back into the engine, finish those projects, ramp up production and profitability. So that in short is the sort of plan. Obviously, so that's in terms of ramping up production, reducing OPEX. There's this good, robust debt management strategy in place to reduce the financial expenses also.
Was there any delay in the payments to your lenders?
I think there were some technical delays that have been since addressed. So as I understand, those technical delays within RBI norms are now been addressed.
Okay, you said after the revamp it would be 6,000 crores, which is neither in nor out, which is under negotiation. What is the current exposure?
The current exposure is about 29,000 crores. Now, you know, let me put it in context. It's like you asking me my weight.
Okay.
And if I told you my weight, say 80 kgs, which is a little more than that, am I overweight or underweight? It depends on my height.
Compared to what,
yeah, compared to what? So what is my debt compared to my capacity? If you look at Essar Steel's debt per ton, it is well below the average and among the lowest in the industry. So let's see debt as a relation to capacity and not by itself alone.
No. So, you know, the stock market's interest also is in that 28,000 crore because that is what the listed banking stocks are exposed to. So, if with this downgrade, what happens to that debt? Is it already NPL or is it likely to get into NPL?
No, that
is it related to it at all?
We believe not. That debt has been sanctioned, the disbursements are on. Once the disbursement comes in, our EBITDAs will increase. We believe in the next year or so, our EBITDAs will be 300% plus of where we are today. So there is a substantial multiple increase in our earning capability.
You incurred a net loss of close to 2,800 crores. What is the expectation as we head into the next financial year?
You mean in FY14?
In FY14?
FY14.
Yeah.
I think because the projects have not been completed, we will not see a substantial improvement. Our eyes are on FY15 when we finish these projects and we are able to ramp up production, and also reduce our costs substantially and permanently and sustainably, we will see a massive change in our EBITDA profiles.
So what is the status of this 29,000 crores that you have? Is it standard debt on the books of
Yeah,
banks?
we are a standard asset with the banks, and to reduce our costs, you know, we've already taken external commercial borrowings of $1 billion. We have an export refinance proposal for another $2 billion. So we expect to shave off about 4.5% of interest from our interest burden.
You're also planning to sell some non-core assets. How much and by when?
We have a proposal for about 2,100 crores of these assets. It's a sale and a dedicated service agreement. And we hope to finish it by this financial year.
No danger at all of getting into a substandard asset or bad debt?
No, I don't, not at all. It's just critical. It was bad timing that these projects didn't get completed. It's a state-of-the-art facility with good value-added facilities, include a modern plate mill, a modern pipe mill, which many steel companies don't have.
So if you you're asking for this extra 6,000 crore, are the banks asking the promoters to chip in?
The promoters are chipping in a 1,600 crores contribution from the promoters.
Okay.
More than half of that is already done.
Have you requested the rating agency to restore the rating confidence? And
we have taken up with them that they need to reassess us.
By when do you think that may come through?
That is difficult for me to answer, but I hope within a month.
Okay. All right, sir. Thank you very much for joining us. The worries of the market really was more with respect to listed entities. But I guess if you're reassuring the market that it will not get into substandard category, that will be a bit of a reassurance for banking stocks. Thank you very much.
Thank you very much. Thank you.
All right, a very quick break. We haven't taken that in quite some time. We'll come back, focus on currency markets and a quick check on what's happening in the F&O space as well.